Big moves are happening in the banking world. Linda Jenkinson has just been named CEO and chair of Vast Bank, alongside legendary investor Greg Kidd, the man who backed Square, Twitter, Ripple, Link2, and other game-changing companies. I've seen Linda in action at a Link2 conference in Portugal way back in 2022, and Greg I've interviewed at the 2024 Trump inauguration and even crossed paths with him at Ripple and Uphold events across the states. These aren't random players, these are people with deep history changing the game. Linda founded Dispatch Management Services Corp, where she then hired Greg Kidd to come work for her full-time while she bootstrapped the company. And Greg, that's where he learned the intricacies of courier dispatch services, following his 6-year stint at the consulting and IT services firm Booz Allen, where he serviced Fortune 100 clients across transaction processing intensive industries, clients including Citibank, Amex, and Sprint.
I've done an IPO, I listed on the NASDAQ. I've also done a revert RTO, which is where you merge a company into a public shell on the Australian Stock Exchange. And I chair a number of everything from $10 million to $6 billion valuation on different public exchanges. So I have quite a bit of perspective in terms of timing, lessons learned, the romance of it. In my first listing, the investment bankers and the accountants made more money out of it than I did. You know, there's a whole set of lessons for the wise in terms of the romance of public markets that really interested in exploring today. So have sort of been playing with this, going public, being private, what's the best place for growth companies for more than 25 years. So.
You know, as you look at the markets, do you care what the markets are? Do you wait for better timing?
Well, it's interesting. Timing is everything, but I would argue that 25 years ago I listed, but even today in the companies, I've got companies that shouldn't be public. Because a lot of the reason why you go public isn't necessarily that you're at a sustainable level or you're at a point where your industry is mature, so that the amount of information you have to expose about your competitive position is a real disadvantage to you. And if you look at the majority of the IPOs that have gone out in the last year, they're underwater. And what happens is that you start going backwards and it's a credibility game. Two of the companies I chair, we should be taking private from that perspective. And I think a real driver for it is liquidity. So this whole concept about what that secondary market looks like is key. And, I saw in Silicon Valley when it first evolved, when, Facebook and Twitter and all these companies didn't go public. The second generation of these companies. But, there weren't enough angel investors and there weren't the smaller positions, but also there weren't enough of those companies. Well, what I see holding back the angel investment side is the ability to exit. It's also, there's so many family and home offices and other places that you can get capital. So the same issue. I wouldn't go public until I absolutely had to. One of my companies, we used it as an ability to acquire companies. We used paper to acquire 75 companies, but that was great when your stock price was moving forward. As soon as, we were literally 3 days away from going from $500 million in value to $1 billion, and there was a cyclical downturn and we lost our ability to buy anything. So the argument was actually, we shouldn't have gone public. If we were too early, we need to be a lot more innovative. So I think this is a significant opportunity. One other thing that's changed for entrepreneurs is it used to be that you didn't get any money out until that liquidation event, which is why the OPO was so important. But today that's changed and it's incredibly important to enable that along the way. So I think this is the concept of an IPO. It's actually, you often end up being illiquid. You often end up at a significant competitive disadvantage, and you often end up losing momentum where you can't use creativity to continue to recreate and recollect. So not to break everyone's bubble, but it's not so much fun.
Do you think that maybe, the more availability of secondaries and more liquid private markets, a la Link2 is actually, shifting the public market, access?
Well, sure. I think if you can get all the capital you need in being private, you can hold off longer but the main reason though that you want to go public then after that is for the liquidity premium, right? The more liquid your shares are, the higher it's valued, and that's being public. And so ultimately, you really do have a fiduciary responsibility at some point to your shareholders to go public and maximize the value of their shares.
Here's where the story gets fascinating. Prior to launching Dispatch Management Services Corp., Linda Jenkinson and Greg Kidd first joined forces in 1987, the same year I was born, where they consulted for a group of New Zealand banks, and their mission was to streamline back office check processing. But what caught their attention wasn't just the data, it was the speed at which the physical checks were processed. See, New Zealand had laws that required all checks to be processed overnight. The banks had a hard deadline, so from 3 p.m. to 10 p.m., they were processing these physical checks every single night. And even though these New Zealand banks had a 7-hour window, they were still nearly 4 times faster and efficient than those in the US. And Greg Kidd, he couldn't ignore it. By 1991, Greg Kidd had gone even deeper, buying a stake in a Wellington, New Zealand courier company, where he then partnered with a Kiwi software developer, Eric Westra, to write and perfect dispatch software, standardizing how couriers operated before heading back to the United States, where he began to license out the software in 1994. Why? Because the US courier industry was broken. Dispatchers, the so-called middlemen, held too much power, allocating work to their favorite couriers, creating inefficiencies and inequalities. Too much power in the hands of one gatekeeper, negatively impacting its market participants. Greg Kidd knew there had to be a better way, and he was right. Now entering the chat is Jack Dorsey.
Going back historically, my journey on payments goes back. I had done a startup, public. This young kid named Jack Dorsey hacked into it. It all blew up. He went to massage school. I went to the Kennedy School for Public Policy. I went to work for this little shop called the Board of the Federal Reserve in the payments group. And sometime later, after Jack had been nanny, when he started Twitter for me, he started this little company called, or had this idea to start this company called Square. And so, I don't know if you know, but Jack Dorsey has no background in payments, nor did his founder. So we had this session at the Pelican Inn near my house where they asked a lot of basic questions. Who can take a payment? How does PayPal work? How does the payment system work? And Jack is a man of few words. And there was this period of silence, and he was absorbing this information, and I was just relaying it as, like a suit, a fed person being. And he said, after a pause, he says, Greg, payments are very intimate. And this is kind of like Jack. And as usual, this is the reason why I'm not the second person on Twitter. I'm only number 62, is I had no idea what the hell he was talking about. And nobody in all my time at the Federal Reserve had ever used the word payments and intimate in the same sentence. And so, I paused and I had to ask Jack, what do you mean by that? And he said, well, you don't pay someone unless you trust them. And what he had taken from what I had said is all the controls we have around payments are all based on worrying about what happens when there's a lack of trust. And yet, most payments are between two parties that already trust each other. Just like a couple's married, they don't need to have protection because they trust each other. And Jack's observation was, what would a payments reality be like if you built it on the presumption of trust rather than the presumption of the lack of trust? And therein, Square was born, which was the concept that a whole group of people who'd never been able to take a payment before could take a payment. And it was the beginning of an exploration that now has happened with Bitcoin and whatnot, of trustless transactions where you can trust the transaction is good, even though there's not a central authority.
A young college student, Jack Dorsey at Missouri University of Science and Technology, was obsessed with real-time dispatch systems. In 1991, instead of applying to Dispatch Management Services Corp., the biggest courier dispatch firm in the world, owned by Linda and Greg, Jack's approach was very different. He found a flaw in their system, wrote them a fix, and said, here's my application. 1 week later, Jack was hired like a good white hat he is. That curiosity would later shape Twitter and Square, real-time communication, and real-time payments. And it all traces back to Dispatch, Greg Kidd, and Linda Jenkinson. And fast forward to today, Jack is still pushing boundaries. He recently launched BitChat, a decentralized Bluetooth messaging app that doesn't rely on the internet to operate. It allows users to communicate peer-to-peer over mesh networks without Wi-Fi or cellular service. Just like Dispatch and payments, it's another way Jack is rethinking how people can connect, cutting out the middlemen and rebuilding a resilient, real-time system. Now let's connect the dots to today. Greg Kidd supported Linda Jenkinson with the launch of DMS Corp in 1990. They ultimately took the company public on the NASDAQ in 1999. 1998, where they made numerous of acquisitions worldwide, dominating their respective market. Greg went on to work at the Federal Reserve, where he then served as Chief Risk Officer at Ripple, leveraging his domain expertise around the controls and safeguards required for moving money safely across borders. Fast forward to now, Greg Kidd has purchased Vast Bank, launching the world's first deposit token USBC, getting the band back together. Linda's back on Greg's team, acting as the new CEO and chair of Vast Bank. Just like his courier days, Greg Kidd is once again cutting out the inefficiencies and gatekeepers, but this time in global finance. And given his background at the Fed and Ripple, he might be the perfect man to navigate these regulatory complexities of the financial system, with the largest market being right here in the US. When you take a step back, a clear pattern emerges. Greg Kidd and Linda, back in the 90s, were fighting against inefficient dispatch middlemen in the courier business. Today, with USBC at Vast Bank, they're cutting out the middle layers of banking, making deposits faster, safer, and more direct. Ripple and XRP were built on the same principles, bypassing outdated financial rails like SWIFT and allowing money to move peer-to-peer across borders in seconds without bloated intermediaries slowing things down. And Jack Dorsey, from dispatch systems to Twitter to Square, he's always been obsessed with real-time connectivity, and now, with BitChat, he's eliminating yet another gatekeeper, the internet itself. He's showing that even global communication doesn't need a central authority. Whether it's payments, banking, or messaging, the mission is the same: remove the gatekeepers, reduce the inefficiencies, and give power back to the people. That's why these stories matter, because if you want to see where the money and technology are headed, just follow the innovators who keep stripping away the middlemen. So here's what I'm asking today: is Jack Dorsey really Satoshi Nakamoto, as he once claimed? Or is Greg Kidd just as impactful as Bitcoin's mysterious founder, given his work to reshape financial infrastructure worldwide? Or maybe the real heavy hitter is Linda Jenkinson, originally the youngest woman to IPO on NASDAQ and is now steering Vast Bank into the fintech frontier. We may never know for sure, but what we do know is this: these powerhouse players are not competing, they're collaborating, just like the central bankers. And together, they're rewriting the future of how banks, businesses, and people transact across the globe. And that's why I do what I do. I sit front row and I share these stories with you, my worldwide audience, hungry to understand not just the alternative investing landscape, but the people and the relationships that drive it. Because when we understand the relationships, we understand the money flows. Thanks for tuning in. Let's keep building the future together. Love you mucho.